Hi and welcome to the 20 Bell Show. We're speaking to Einstein Kihanda, the CEO of the ICEA Asset Management. Now, something happened and they closed their redemption offer on the ILAM Fahari I-REIT from unrestricted into a restricted I-REIT. What does this mean for unit holders, and what does it mean as well for the future of this particular REIT? Einstein, welcome to the show.
Thank you very much.
It's good to see you. It's been long, but at least you're here. But first, let me start by really opening up the conversation by speaking about this particular real estate market, if I may call it that. You are credited as the pioneers of this segment of the market where you have had unit holders manage and get into this particular market. But I wanted to ask you, from the perspective of a leader in this industry, how is this particular market like to you?
I'd say it is a market with a lot of potential, and it's good that you started by giving some history.
Yeah.
So it's been now 8 years. So the ILAM Fahari I-REIT initially started off as the Stanley Fahari I-REIT and was listed in November 2015.
Yeah.
And sought to raise about 12.6 billion shillings to invest in property. And for various reasons, including the fact that it was a very new asset class. They needed to do a lot of investor education, questions regarding the properties and the properties in the portfolio.
Yeah.
Succeeded in raising only 29% of the targeted capital.
Yeah.
It was a pioneering REIT.
Yeah.
It was actually the first REIT in the market, and came soon after the REIT regulations were approved and set up by the CMA back in 2013. So I would say that it was a learning process.
Okay.
I think all the challenges and the difficulties that the REIT experienced have been a learning point for the other REITs that have come in the market. So to answer your question, I think I would say that it is a market with significant potential.
Yeah.
And why do I say that? Is because soon after, after our REIT, we have subsequently seen other REITs come into the market, and there are even more in the pipeline. So it's generally now accepted that this is a fairly important avenue through which investors can invest in the property market collectively. So I see a lot of potential, and I think the learnings that we have gone through have helped to strengthen the market and even guide the decisions that those who have come behind are learning from and improving on. So as a pioneering REIT, yes, we've gone through our challenges and our difficulties, but I think we are set on the right path.
Okay. Let's talk about now the current. You've been on the news for the last few days. I think we've also aired a few of your announcements before. And I'm curious to ask you, of course, definitely you have alluded to a few things. The learnings were there. What informed this? Why did you choose to, pursue this conversion from the unrestricted to the restricted I-REIT?
Oh, thanks for that. Because again, I'll just go back into history.
Yeah.
I've given you the reason, the performance of the REIT from listing, and this is where now the role of ICEA on asset management comes in.
Okay.
So in 2019, we signed an agreement with the then REIT manager Stanley to acquire the portfolios that they were managing. Yeah. And this included the REIT. So we took over the REIT on the 18th of May 2020. Now, if you remember, 18th of May 2020 was also the year of COVID. 2 months after that, 2 months after COVID had been announced as a pandemic all over the world. And very tough time for the property market. And just to give you some insights, we took over at a time when the government had already instituted regulations to close businesses like restaurants, bars, schools. So we had tenants in our properties who were then now seeking concessions and discounts on their rent for the simple reason that their businesses were not open, so they were not able to pay us rent.
Absolutely.
So those are some of the first developments issues that we had to deal with. And therefore, even in terms of the expectations of the income that we were going to earn from these investments was obviously going to be affected. Definitely. But there was an even bigger issue. The flagship property in the REIT is the Greenspan Mall. Yeah. And at around that time, the beginning of that year, the anchor tenant was Tuskys. Yes. And had already started experiencing financial problems. Oh, sad. So we had issues of unpaid rent, expired security deposits, and we then had to deal with how to manage that situation, to the extent that we eventually distressed them, and by the end of the year had left the building, and we then embarked on the process of onboarding a new anchor tenant who came in August, signed the lease effective August 2021, and opened the store last year in February. So it was a very challenging time for us as we now started over the role and responsibility of managing the REIT. Now that takeover process and the time that and that particular year of 2020 was also the expiry of the 5-year strategic period for the REIT by the previous REIT manager. So as the new REIT managers, we then now had to embark on a new strategy. And so what we did was engage a consultant who went through a very comprehensive review process. And one of the most important steps that we undertook was to talk to all the key stakeholders that are involved in REITs. Why? Because as the pioneering REIT, it was already clear that there had been many challenges that the REIT had gone through. I've given you the history in terms of, for instance, the amount of capital they raised compared to what was the target. And even the issue of the price, the share price. The share prices had dropped significantly. And so there are a lot of investors who are quite unhappy about how it had performed. And there were many issues. And so we felt that we needed to go to the heart and the core of understanding what is it that really ails the REIT, what can we do, and how can we improve its performance. So we engaged and talked to very many players, including the regulator, the CMA, the NSC. We talked to even other REIT institutions that manage REITs. We talked to fund managers. We talked to industry players, consultants, and this. I mean, we're talking about more than 60 different stakeholders, and collating all those views and listening to them. It got to we realized that there needed to be some very radical change in the REIT as it is. Now, the REIT really is, funds being pulled together. It's very important that for it to achieve the expectations of investors, there needs to be a critical mass in terms of properties that are in that pool that can be able to generate adequate income and deliver competitive returns to the investors. Because of that history I've given you, it meant that the REIT was not performing at its optimal level. So we needed to undertake various measures. One of the observations, and this is also from talking to a lot of the investors, was we would struggle if, for instance, we needed to raise capital from the investors. In its current shape and form, they were not willing to support it, and they were therefore very clear that there needed to be another way that needed to be thought through of how you can restructure this REIT and position it to offer returns to the investors. And we then had to come to the point of realizing that we needed to shift the platform on which the REIT is listed in order to shield and manage the issue of volatility. And it appeared that the volatility in terms of the market was also a big factor. And I think our observation has been borne fruit by the fact that the subsequent REITs that have come to the market have actually not followed the route that the Fahari I-REIT initially followed, and for those very reasons. And as you have seen, they have also been able to raise capital on that other platform. So I think it's given, it's confirmed the understanding that we needed to shift to...
And by that other platform, you mean USB?
I mean the unlisted securities platform, the USB. And that is therefore the approach that we took. Engage the regulators. And we got to the point now where we received approval in August from the regulator now to make this offer to the non-professional investors that will then allow us to move the REIT from the main investment market, unrestricted, to the restricted market, which is restricted to the professional investors.
Wow, I think that's a mouthful, and it's important to build a context so that people can really understand, because there were so many questions of why this is happening. And I'm also curious now that you closed this, from a general perspective, how was the reception?
I think the reception was positive. Because right from the time when we made the announcement, we received a lot of feedback from investors. And the other thing that we also did was to create opportunities for us to engage the unit holders. So we had webinars. We had various, we had webinars. We also did Twitter calls with investors. We did media briefings, broker trainings. All of this was in an effort to ensure that we communicate all the information that investors had with regard to this particular transaction. And it gave us an opportunity to really listen to the queries that they had and address them. And so I think that 1 month period gave us an opportunity to really engage, and it has given us a perspective that it has been positively received. And I think we are on the path to getting to the next stage of the process.
So your redemption offer was 11 shillings per unit for the non-restricted.
Yes, it was.
And one of the questions that was coming up was, how do you arrive at this valuation?
Thanks. I think I can say that it was a fairly scientific process, and we've actually outlined it in great detail in the conversion offering memorandum. But just to give you a perspective, we looked at various methodologies in terms of valuation methodologies, including what you call the dividend discount model, the income approach, and also the net asset value. And we came up with a weighting of this different pricing mechanism to arrive at a price that was we deemed appropriate and attractive enough to the investors. And I think if you look at how the trading that took place soon after we made the announcement, and also the activity that we have seen, it was a significant boost to the market, especially when you look at the current market environment in terms of share price performance. I think it was a fairly positive development for the market, and I think there was a lot of enthusiasm and interest from the unit holders. I want us to take a quick break, but once we come back, I'm curious to know, for the people who are watching, is there some hope for them, and what does it mean even for the ones who decided to stay on in this particular offer that you gave out? We're taking a short break. We'll be right back right here on the Trading Bell.